Hey guys, this is Michael, your property guy again, and I'm going to use my flip charts right now to explain to you about property investment. Now, a lot of people are probably asking, why do property investments? Well, of course the answer is to make money. But how do you make money from property investments right now? Let me just share with you my tips right now, okay? So again, one of the things I'm going to share with you is this. The only reasons why you're doing into property investments is because of these two things. And that, my friend, is first cash flow, or the second thing called capital. Now, how to do this right now? And it's really easy. When I look into properties and why do I buy properties is because it's because of only these two things. And how do you do it? Well, first things first. Michael, how do you make money from properties? First things first, you gotta buy one, right? Now, there's only two easy ways of how you can make money from properties. Seriously. The first is when you buy it, then after that, what do? You rent it out, right? So buy to rent is basically a cash flow strategy. The second is when you buy into a property and then if you want capital appreciation, you sell it out. So there you go. You only have these two ways of making things. And I want to give you another term that I always use in all my talks right now to make it simple and make you remember right now. Okay, and how you do this is this, right? If you want to buy, if you're an investor that buys properties to rent it out and to get cash flow coming in, you, my friend, love to keep, right? You're a keeper, right? You just buy properties and you get keeping it over and over again. Now, if you're a person right now that wants to buy those kind of properties and you want to sell it out and make a profit, you, my friend, are a flipper. Okay, so you like to flip. There should be only two types of investors out there when you go into property investments. One of them is either you become a keeper or the second one is either you become a flipper. And my friends, these two over here are two completely different animals. So you have to decide whether are you going to be a keeper today or are you going to be a flipper. But before you do that, let's delve in deeper and let me share with you a little bit of the fundamentals, a little bit of the formulas on what you should do if you want to be a keeper or you want to be a flipper, okay? So let's go. So first things first is this. If you want to be a keeper right now, you must understand the rules of keeping. Therefore, you must understand the keep formula. Alright, so a keeper has its type of formulas, and the formula for keeping right now to get cash flow coming in is basically this. You have to make sure you understand how to get the money coming in from the rental yield. So that's right, my friends. If you are a keeper, you're now taking into the rentals. How much are we getting from the properties to get it healthy over here? So I'm going to share this with you guys right now. Rental yields are predominantly depending on each country. So I'm going to take Malaysia for example right now. Okay. So first things first, you're going to count the formulas out. And the formula for rental yield is very simple. It is rent times 12 months, because this is rental per month, times 12 months, okay, times 100%. And then is divided by the property price. So how much did you buy the property for? Okay. So by doing this right now, you would then get to a certain percentage. And for Malaysia today, basically we're talking about more than 5% per annum. Now, depending on which country you go for right now again, and I'll explain this in many of my other videos, right? But let's take it simple right now. An ROI, you must fix a number at the bottom to make sure that you get a healthy return coming in. And for Malaysia right now, because our interest rates are at about 3.2%, 5% will make you a cut of about 1%, making it healthy enough for you to get a positive cash flow coming in. So why do you want this? Is because you want this number to be higher than the interest that you're going to pay when you buy a property using a loan. That's it. And once you get a positive income coming in, so this one becomes a positive income, therefore you get positive cash flow. You can sit back at home and let the paychecks come in after you pay back the banks and get passive cash flow coming in. So that's number one. All right, so now step two. Say, Michael, but I don't want this. I want something bigger. I want the capital returns coming back. Well, if you want to be a flipper, my friend, then you need to understand the flip formula. So what's the flip formula over here right now? And the flip formula doesn't actually look into the rental returns that comes in. Basically, you look into this. You want to look into saying, hey, how much can I sell the property for? Okay, versus how much that I bought the property for, and you divide it by your original buying price and you times 100%. Right? And this must be a healthy number as well. So for this example over here, I usually pick anything above 30% because I would say anything less than that would be very, very slow. And this would then define how much money I will make from here. So very simple right now, let me just give you an example. Imagine if I bought a property for 1 million ringgit right now, I will need to sell it at 1.3 million in order for me to profit at 30%. Now, as you can see, the difference between this formula and this formula is this. This doesn't have a time limit. It's not per annum. It is a one-time transaction. For example, you could buy a property today and you could wait 2 years, 3 years, 5 years before you sell it off. So this is not 30% per annum. This is 30% within that 3 or 5 years. Therefore, what you need to do is you need to divide that by time, and time is usually defined by years. Right? So how many years have you kept the property? So I always tell flippers right now, if you want to make the highest amount of money, sell in the shortest amount of time. Try to buy one today and sell it within 1 year. As a matter of fact, I know some really aggressive, really good flippers that could be able to sell it within half a year or 3 months, therefore increasing the returns per annum. Alright? But basically, if you want to be a normal conventional investor, it takes an average of 3 years to 5 years. So assuming you did this in 3 years time, minus all the expenses coming out, you get an average return of 10% per annum. Right? You understand? So this is the two different formulas here. Now, before I go on and talk even more into details about how you can benefit from here, watch the formulas itself. If you realize a keeping formula and a flipping formula defines two different target markets. What do I mean by that? If you want to keep, what you're going to look into right now is where you're going to get your rentals coming from. And by doing that, I want you to pay attention to this. You get your rentals coming in from someone who is called a tenant. So this would be your target market that you want to look into in order for you to get that 5% coming in. So ask yourself, who are the people who's going to rent your property at that location at the highest price? Right? So you got to find out who your tenants are going to be. Now, if you want to be a flipper, then what you're going to look at right now is this. Okay, who are you going to sell it to? So you'll need to find out who are your potential buyers in that area. And if you can see this over here, you define that, hey, who's willing to buy your property at a higher price 3 years from now or 5 years from now. So as you can see, you can understand right now why a flip formula and a keep formula would define two different types of target market. One is a tenant, one is a buyer. And for me right now, what I do is this. I always pick the type of properties I buy at the beginning, deciding whether am I looking for buyers at the end of the day or am I looking for tenants at the end of the day. And that helps me make my money all the way. Can you make money in both areas? Sure you can, but it takes a lot of practice. I recommend, for those of you who are watching this right now, pick one of these to do first, right? If you get one of them, then you can match both together. But the biggest problem about most investors nowadays is that you try to match both together and that's why you fail. So here you go. This is my little simple formula that I actually share that I've never lost money until today because I keep to the numbers. So if you like what you hear right now, click the subscribe button below and follow me for more investment tips.